Welcome to a new episode of our Global Insight series. Today, we're diving into a seismic shift that's reshaping the global investment landscape, China's economic resurgence.
Despite concerns over debt and an aging workforce, China's economy is still growing faster than most of the world. The secret? A relentless push toward innovation and technology. Through initiatives like Made in China 2025, Beijing is driving leadership in critical industries, AI, biotech, aerospace, and green energy. And here's the kicker. China is already a global leader in renewable energy, dominating the production of solar panels and wind turbines. For investors, this means huge opportunities in sustainable and ESG-focused investments, a space where China is pulling ahead of the pack. After years of regulatory crackdowns and geopolitical fears, Chinese equities are rebounding. But even after this rally, they remain at less than half of their 2021 relative levels. Translation: there's still room for growth. Goldman Sachs projects $3.5 trillion yuan in shareholder returns by 2025, a 17% jump. That signals a shift in corporate culture, with companies focusing more on shareholder value than ever before. And then there's AI, the game changer. Analysts predict up to $200 billion in investor inflows this year, with AI alone boosting Chinese earnings by 2.5% annually for the next decade. That could push valuations 15 to 20% higher. Politics in China may not be everyone's cup of tea, but compared to the current chaos in the US, China looks positively serene. While the US is shaking up global trade relationships, China is quietly maintaining 7 of the top 10 global trading partnerships. In a world searching for stability, China remains a dominant economic force. And even on trade wars, China has de-risked itself. When Trump's first tariffs hit, China accounted for 22% of US imports. Now, just 13%. Beijing has successfully diversified its export markets, reducing dependence on the US and softening the impact of future tariffs. So what happens next? China is expected to roll out new stimulus measures in the coming months, likely targeted at unlocking consumer spending and stabilizing the struggling housing market. Households have money, they're just not spending it. The government is set to change that. Expect accelerated housing destocking and increased funding support for real estate developers to ease liquidity issues. The result? A stronger, more confident domestic economy, and even more fuel for equity markets. China isn't just surviving, it's evolving. With a booming AI sector, a rebound in equities, and a government set to stimulate growth, the potential upside is too big to ignore. Don't miss our next Global Insight series deep dive. Hit subscribe and stay ahead of the market. See you next time.